Construction company owners, if you need $50K to $500K for materials, payroll, equipment, or job-related cash flow, this video is your step-by-step guide to getting approved without the runaround. I'm going to break down what lenders actually look for, what documents to prepare, and the mistakes that slow approvals. Welcome back. It's Demetrius. I help business owners understand funding and how to position their business to get approved. Today, we're talking construction funding, how to qualify, how to move faster, and how to avoid the common traps that waste time. If you want more funding content for construction companies and business owners, like, subscribe, and hit the notification bell so you don't miss the next video. Part 1, why construction companies need funding and why it's common. Common cash flow reality. You pay labor and materials up front. Customers may pay later, net terms, progress payments. Jobs can be profitable but still create cash crunch. Seasonal slowdowns and weather delays. Equipment breakdowns can stop revenue. Construction businesses don't struggle because they don't have work. Many struggle because cash flow timing is brutal. Part 2, what construction funding can be used for. Payroll and subcontractor, pay materials and supply runs, equipment repairs or upgrades, working capital while waiting on draws, vehicles, trailers, tools, marketing and growth, hiring, expansion. Be specific about the purpose. Clear use of funds can speed underwriting. Part 3, what lenders look for. Now here are some approval factors. Cash flow and deposits. Lenders want consistent deposits and stable revenue patterns. Bank statement health. Too many insufficient fees, overdraft slows approvals or reduces options. Time of business. More time usually unlocks more options. Revenue trend. Stable, growing is best. Dips need explanation. Seasonality, weather, one job ended. Debt load. Too many payments reduces what you can qualify for. Credit profile helps, but many decisions still heavily weigh business performances. Clarity of the request. A clean breakdown, payroll, materials, equipment helps faster decisions. Comment funding if you want me to tell you which part of this scorecard is hurting most construction approvals. Part 4, the no runaround funding process, step by step. Step 1, choose the right amount, $50K to $500K. Don't just pick a number, tie it to a job need. Right size the request to what cash flow can support. Now here's a phase strategy. Fund now, step up later. Example, $75K for materials and payroll on 2 projects, $150K to float labor while waiting for progress payments, $250K for equipment and hiring plan. Step 2, build the funding ready folder. Have ready your last 3 to 6 months business bank statements, folder ID and basic business info, EIN, entity. Simple list of monthly expenses, payroll, rent, insurance. Current job pipeline or invoices. Helpful, equipment quote, repair estimate if there. Speed comes from being prepared. Step 3, clean up fast red flags. Reduce overdraft, insufficient fees, immediately separate business, personal spending. Keep business consistent where possible. Avoid large unexplained withdrawals. Step 4, be clear about use of funds. A simple breakdown. Example, payroll, materials, equipment repairs, working capital, buffer. Clarity reduces questions and questions slows approval. Step 5, apply strategically. Avoid scattershot application. Don't apply everywhere randomly. One clean targeted process often works better. Match funding to the need. Working capital for cash flow gaps. Equipment financing for tools and equipment. Lines of credit for recurring materials. Part 5, common mistakes that create the runaround. Mistake 1, requesting too much with no plan. How to fix it? right size, and clear breakdown. Mistake 2, too many overdraft, no sufficient fees. How to fix it? Stabilize the account for 30 days if possible. Mistake 3, mixing business and personal. How to fix it? Separate and consistent owner draw. Mistake 4, no job pipeline story. How to fix it? Show invoices, contracts, bids, even a basic list helps. Mistake 5, taking funding that crashes cash flow. How to fix it? Pick repayment that fits the business, avoid stacking. Part 6, real construction example. General contractor needs $80K for material and payroll to start 2 jobs. Roofing company needs $120K to float labor while waiting for insurance payments. Concrete company needs $200K for equipment repair and working capital buffer. Tie each to deposits, clean statements, clear use of funds, right size requests. If you're a construction company owner and you need $50K to $500K, comment funding and tell me how long you've been in business, your average monthly revenue, and what you need the money for: payroll, materials, equipment, or growth. Construction funding doesn't have to be confusing when you know what lenders look for. If this helped, like, subscribe, and hit the notification bell. I'll see you in the next video.